Hey everybody, Brian Shannon here. Today is Thursday, the 11th of January. Let's talk a moment about where to set an anchor for our analysis. We're looking to start here with a 30-minute time frame of the S&P 500 futures, the ES. The E-mini began trading on Monday, the first day of the year. Equities, of course, only started trading on Tuesday. This is where the first bets on the S&P 500 were made. That is the anchor from the very first trade of the year. When we saw that happen, I was first using the anchored VWAP from the beginning of the year on a 1-minute chart because you couldn't find value looking at a 30-minute time frame with only 2 minutes into the trading year. So as time progresses, I've moved over to a 30-minute time frame, and you can see the value of this year-to-date anchored volume-weighted average price. The sellers took control, and we saw a pattern of lower highs and lower lows, with that anchored volume-weighted average price providing resistance until last week, where it popped up through that level. Now, looking at it, we've seen today we've pulled back all the way into that year-to-date anchored VWAP, and the buyers were there to defend it. So what was once prior resistance now seems to have become support. So once this market started to rally like that, I figured, well, that is the lowest low. We had this high that took out that high. We had a higher low. So this was the low of the year so far, and still is. So I put an anchor on that. I want to see how the market responds to it. It doesn't mean I'm automatically going to buy pullbacks to that level, but it's, as I always say, a level of interest. And same is true, of course, for the year-to-date anchored volume-weighted average price. This green one I put on the chart on Sunday evening, the first trade of the week for the S&P futures. So Sunday evening, when the S&P 500 futures opened, the sellers were in control until they regained control for the week right here at this point. Now, the week had only just begun, of course, and the equities weren't even open yet. This is, just prior to the equities open. On the New York Stock Exchange, 9:30 a.m. Eastern Time. What we have now is that's where that began, and we saw the pullback. I did not buy over in here. I mentioned on Twitter, here's the level of interest. I had purchased as the market rallied from that level. I didn't try to buy as it touched that level, because just like this time this morning, it might have sliced right through that. Instead, I look at it as a level of interest, and when it hits that level of interest, I switch to a very short-term time frame to look for evidence that maybe I'm going to purchase it. Now, if you go back to the charts I had posted, I had also put a anchor at that point right here on that peak. Now, I had it colored red, so let's just change the color right here. And this is TradingView. They allow for futures charts, that is. We saw that the market rallied off of this anchor and straight up through that level. So this is where the new momentum campaign began. That's what I refer to as a handoff. The handoff of the momentum occurred back up into the upside here at this point, and then it held above that level on tests. Now, that first and second day. Yesterday, we saw a powerful move beyond that range finally, and that's where the buyers regained control. I took this anchor off because this morning it was in the same place as the anchor from that low, and I wanted to keep my charts simple. So when do I take an anchor off? Well, once it gets in the way of your analysis or no longer has any value. So we came down to the year-to-date anchor, and what do I do there? Do I buy right at that level? You can look at it and say, well, you should have, and hindsight is always perfect to say that. Instead, what I do is I look at a very short-term time frame. I look at the 1-minute chart, and you can see it didn't actually touch right there. Instead, it bounced a little bit. I had made a purchase over here. I've sold most of it right now for two reasons. One, we're up against the anchor from that handoff point, that black one, and this is from the high that it's made here just yesterday, and that high yesterday is, of course, the high for the year. So right now, the purple is the year-to-date low point, and this is the year-to-date high point. I'm going to keep that on there as a level of reference to say, since that prior momentum campaign began right over here at that handoff, now we're up against that level. We have 3 days worth of people who purchased in this area who might be looking to break even. We have people from the absolute high Now it's getting up to that average point. I look at this and say these two anchor points come together. Here's a potential level of supply. That's why I'm out of most of my long right now. I have a little bit in case we continue to rally up through there and just completely ignore these. I don't look at it as a place to necessarily sell all of my position, but to say, here's what could happen in here. So now what I would prefer to see happen is we pull back down a little bit, maybe towards 47.80, rally back up, create another higher low at maybe 47.90 in the coming day, and then resume the upside. These are the scenarios you have to outline in your head. I will add a new anchor, most likely, if the buyers can maintain control. I think that you want to add an anchor here. And then perhaps we see that we get a pullback down towards that level, and then we bounce. Then we rally up, pull back towards it, and bounce again. Then the buyers can take control. These aren't predictions. This is how I look at the market and try to anticipate what its movement will be. We're in a primary uptrend on the longer term timeframes. It's the buyer's game to lose. So when we see these quick sell-offs, I like to get stopped out of my long positions, reestablish down here, see if the market will allow me to hold that small piece that I have right now. And it's up to the market to tell me whether or not to hold. Hope that was helpful. You can always, of course, read more about it in my book, Maximum Trading Gains with Anchored VWAP.